I'd like to get through your report card here, an interim loss which narrowed. First off, when do you expect to return to profitability, and what's causing this loss?
Well, first of all, I think the earnings that we just published for the first half of 2025 were beyond our expectations. We are seeing operating growth of 13%, but more importantly, our EBITDA growth of 63% versus last year. And that really shows the resilience of the ultra hospitality luxury segment and the efforts that the teams have put together in going after every business available, particularly in the Asia North region, which has been suffering a little bit more than the rest of the world. But we have a global business, we have a balanced business, and that really helps us to produce the results. So we are cautiously optimistic for the balance of the year.
You have 12 hotels under operation, and in the second half of this year, it's a traditional high season for you. But in your earnings report, you cited both opportunities and challenges. What are some of the challenges?
I think the challenges remain more into the mindset of the travelers. All the news that you've been sharing this morning and the rest, it just impacts a little bit the decisions to travel. But we are seeing some resilience, as I said, in the ultra luxury hospitality, and the second half of the year will see some more moves and movement. Particularly, I think Hong Kong and China in general, we're seeing some green shoots of travel, and that's something that is encouraging.
You've been at the job now for 5 months and commenced a strategic review. Is this kind of just to kind of take stock where things are in terms of the completion that's expected by the end of this year? What do you expect to do with this strategic review?
Well, first of all, I think the opportunity to join the Hong Kong and Shanghai Hotel company is fantastic, because it's a company that has an amazing legacy and heritage. But at the same time, we are in an industry, the luxury hospitality industry, that is growing, and there's not a lot of growth segments in this world today. So having the opportunity to do a strategic review of where we are, who we are, and how do we perform against the market, and where do we want to go is amazing. And having joined now for 5 months, I'm impressed with the assets that we have, the balance of the assets that we have, and the teams, more importantly, because luxury hospitality is all about service, and service is about people.
Your flagship property is here in Hong Kong. We've seen an increase in tourist arrivals, but they're not going luxury. Talk to us about the Hong Kong market.
Yeah, it's a bit of a tale of two cities. As you know, Hong Kong and Shanghai Hotels doesn't only operate luxury hotels. Of course, we have the Peninsula Hotel, which is at the moment flat versus last year, and that's our trend in Greater China. But the other assets that we have, such as the Peak Tram or the Repulse Bay Complex on residential, is showing some positive numbers. And I think it shows that on the tourism side, there is more inbound into Hong Kong, and on the residential side, we're seeing the return of expatriates, but also more confidence from the local community in upgrading and going into apartments. So that's positive. There's a trend that I think is also very interesting, particularly in Greater China, and is this concept of leisure, combining a business trip with a leisure trip. It means extending your stay for 1 or 2 nights and reconnecting with the city. For a lot of international travelers who had not been in the region for a while, I think this is something we're capturing, and we're very excited about this positive shoots.
You've got 2 properties on the mainland, Beijing and Shanghai, and that's a market that we continue to talk about, consumers being price sensitive, and this anti-involution campaign that the officials are working on. In terms of the impact from the anti-involution as well as the U.S.-China trade war, have you seen this play out in your properties?
I think that it's definitely been a bit more challenging in our China operations, but we are seeing the return of international travelers. It's not to the levels of what we used to enjoy, but what's important, I think, for our customers and for the travelers is the legacy and the quality that we offer, and that's something that weathers the various challenges that we have, and we're optimistic about the future.
As far as Trump policies are concerned, you're also seeing impact in some of your U.S. properties like New York, the geographic mix. Can you share with us?
Well, actually, our U.S. operations are performing very well. It's become a much more U.S.-centric market, definitely, because there's a lack of inbound also into that market. But we're seeing very strong resilience. We just renovated our New York property last year, and we're seeing very, very strong growth, over 50% growth year on year. in New York, and the rest of the property, whether it's in Beverly Hills or Chicago, is also performing well. So as a luxury hotel company, we are more resilient, I think, to the impact of the tariffs. This is, as I say, more impacting the mindset of the travelers, but not so much impacting our operations and business.
When you talk about mindset, there's also Japan, right? We heard from Cathay Pacific yesterday about the impact of this rumored expected huge earthquake in Japan, and that impacted the travel, Hong Kong, Greater China demand going into the Japanese market. How was that received for you guys in Tokyo?
Well, luxury hospitality is an emotional business, and definitely understanding the mindset of our travelers is important. But I would say that we have seen a small decrease of bookings during the period, particularly around the end of June and early July, but we're back on track. And what's interesting about Japan is the resilience of that market. It's still a new international destination, and while maybe we had lost a little bit of ground with the bookings from Greater China, we're seeing amazing results from the US as well as Middle East. And this Middle East growth segment is also spreading into Greater China, and that's something we're going after very, very aggressively.